not easy to understand why stocks go up and down. But even in volatile markets, there's always a discoverable and logical reason behind price action. StoryTrading is a social investing community of investors who share information to uncover the hidden stories behind the trade through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. All price action can be understood through the lens of these pillars, allowing for a holistic view that empowers better decision-making. Only by understanding markets can you beat them. Join our community today and start making sense of markets.
Good morning, everyone, and that's what we're all about, making sense of markets. We collaborate in our community to understand data from not just fundamentals and technicals, but also sentiment and catalysts, to look at stocks holistically and bring understanding to price action, which we believe will empower you to make better trading and investing decisions. Thanks for sticking with me, guys. Yesterday, I was out feeling terrible. Back here today, I'm a little bit behind. I really was feeling so bad I couldn't even look at the stocks too much. But here we go. Today, 2 p.m. FOMC. So I'm going to focus the commentary on that. You can see the title of today's video is, will the FOMC meeting cause a bear market rally or a crash? One thing it doesn't say is, will it cause the bottom of the market? Because I personally don't believe that the bottom is in. I want to go back and talk about Apple earnings last week. And because at the end of the day, if we're going to have a bigger crash in QQQ, which could impact all of our other holdings, it's got to come from Apple. Okay, Amazon's already down 15%. Let me see if I have Amazon up here. Okay, right. So we already see Amazon making a big move. Let me switch to the weekly here. There we go. Right to that 200-week moving average. So I don't know. Is that move over and done with? Could possibly be. The big one holding things up here is Apple, holding most of its COVID gains. So Apple earnings, I had went into that thinking I had some hedge on. I was shorting Apple a little bit. And my worry was, if guidance was bad based on April numbers, that we could have a Black Friday or Black Monday event. So we didn't get bad guidance. We got zero guidance, which it was enough for Apple not to go up. It tried to tag 170 right after earnings. And despite the awesome Q1 report, it traded down. But one thing I want to show you with Apple is that it held the 50-week moving average. You can see it right here. That's that red line right here. Let me switch to the 1-year chart on the weekly. And you can see Apple just tagging here and here, the 50-week moving average, and that's great. I think that's 154. Okay, that's the key number. I've been talking about that we need to hold to avoid a big crash. Actually, it's been moving up a little bit, so now it's probably, because it moves every day, but maybe 155-ish, something like that. Okay, so I think Apple's pretty strong, and the fact that they didn't guide lower, of course, the skeptics will be like, well, they didn't say anything about April. They skirted the question. Some people can be worried about consumer discretionary spend, but I think that's why it didn't go to 170 and above, right? That's why it traded down. I personally think this 154 is going to hold. If we see some volatility today at 2 p.m. and it usually, the thing, like the first fight, it doesn't choose its final direction until a few minutes later, right? Sometimes it's the opposite, right? The initial reaction at 2 p.m., if it's usually big down, then it resolves up, and vice versa is very often what you see. But I think 154 is the line in the sand for Apple. And there's a possibility here for a bear market rally. Now, I have to say, regarding sentiment, I've never seen sentiment so poor in my life, right? I'm talking about qualitative measures of sentiment, how people are chatting on social media. There's also obviously put-call ratios to look at. There's the VIX to look at. If you look at like put-call ratios in the VIX, it's not necessarily as low as like the COVID crash, but qualitatively speaking, this is the worst sentiment I've ever seen, ever, by far. I mean, I cannot find a bull anywhere. Like, you can barely find someone who's even like, yeah, we can get a bear market rally. And even those who are saying a bear market rally, they're thinking it may not be as strong as you'd otherwise suspect, because there were a lot of people thinking after that Friday down day and Amazon 15%, a lot of the contrarian traders, a lot of the technical traders were like, yeah, we're going to bounce Monday and Tuesday, which we really didn't get. We got further downside on Monday, a little bit of a recovery yesterday. So sentiment is super, super bearish. Now, there's one thing I want to say about this I've been talking about in the rooms is that it's probably true that usually it may be a good idea to be contrarian, right? That if everyone's bearish, hey, it might be time to go bullish. And that might be the case today as far as a bear market rally goes. But I do want to add one thing. You've all seen those charts out there of the cycle of the markets, right? From optimism to euphoria and then denial and depression, all those phases. There's lots of versions of it going out there. I strongly believe we're in the denial phase when it comes to mega cap stocks. Well, maybe a little worse than maybe it's a next step after denial when it comes to Amazon, right? I mean, maybe denial in Apple. But here's the thing. My point is when we're in a denial phase, what's the definition of denial? The definition of denial is you're not acting on what you believe, right? So you can have all of these people on social media who are very, very bearish, but they're probably still 80% long and they're probably still long Apple, right? So there's still room to the downside in an environment when we're in the denial stage. And this is where the contrarians could be wrong. And in fact, they have been wrong for much of the last few weeks. A lot of traders and contrarian traders have been looking for a bounce. They're not getting it. The popular wisdom has been correct and it keeps going down. So where do we go from here? I don't know short term. Do we get a bear market rally starting today? Do we crash starting today? I know the consensus is probably half a point increase in the rates, right? So obviously, if it's 0.75, maybe it's going to be a bad reaction. If it's in line, who knows? If it's less, maybe we get a bull, right? All the conventional wisdom on that, right? But longer term, I still believe that there's a good chance that the QQQ will have to trade closer to the 200-week moving average before we can call an end to this. And I've been saying it for a long time. I'm going to guesstimate that's around 276 because this is a moving average that's going up. Okay. Now, how do you trade that? That's up to you. Whether you want to hedge, you don't want to hedge. I currently have a hedge going into this meeting, even though I'm aware there's a possibility of a bear market rally. But one thing to possibly be optimistic about is some of our risk assets, DRIO, even SMSI, Kodak, even ARKK. I think it's true. Yeah, they have not hit new lows while the Q have been hitting new lows here in the last several days. Actually, I might be a liar on ARKK there. That may have been a new low. But we're seeing signs of some divergence, right? Even on that day, Amazon's down 15%. When the Qs hit new lows, it's not red across the board. And I'm hoping that a lot of these risk assets have been hit so hard that perhaps the bottom is in or the downside is not that much more for particular stocks. You gotta pick them, right? There's a stock pickers market. We may have some more volatility to bear with. So with that, let me go into a couple stock updates. DRIO Health just announced this morning earnings are coming out next Thursday. Hey, I believe this could be a leader on the other side of things in the digital health space. I believe they're taking share away from Teladoc, and I believe they have the balance sheet in order to avoid dilutive financings here in the future. So that's a story. We will see some progress in terms of revenue and profit and gross margins next Thursday. So that'll be interesting. And maybe soon they'll announce who that big insurer is, which would mark a milestone, the national insurer. So that'll be great. Other interesting earnings. Yesterday, we had a bunch of agriculture earnings. Potash stocks, Mosaic and IPI just crushed it, man. This really comes down to sustainability of earnings at this point. For how long do you believe potash prices are going to be high? I don't know if these are adjusted yet, but if you go look at the earnings on Mosaic and Intrepid Potash, you'll see that they're very low value now. Like, I don't know how accurate these are, but PE4 for IPI, PE15 for Mosaic. Go take a look at the report. You'll see that these look cheap at this point, but it's a matter of how long will these fertilizer prices be high. So that's some qualitative judgments you have to make there. So go ahead and you can look at those stocks, but they are just killing it, Mosaic and IPI. Another one, agriculture stock on our list that just killed it yesterday was TWI, Titan International. They do agriculture equipment like Deere. So look at that new high they hit yesterday. Huge day. I think Sanjay brought this to their group, and Tony was a big advocate for it. So that's an awesome stock there. But look, it's not across the board ag. ANDE had poor earnings yesterday, down 10%. I don't know the company specific reasons, haven't looked into it. Archer Daniels, which is like a mega cap in the States, $50 billion. They didn't have great earnings the other week. So even within the agriculture space, it's hit or miss. We know ARTW, even though they have record backlog, they're having trouble with supply chain and staff to fulfill backlog orders. So their stock took a hit. So even in the ag space, you got to be careful. So play it like you like, but take a look at those reports. Moss, IPI, TWI, awesome reports yesterday. So I believe that's all I got. I didn't see anything. Let's just take a quick look here. So, Dow was it Dow that had a terrible report yesterday while I was out? Looks like they rebounded, but the headlines look terrible on the DOW report. In any case, all right, so that's all I got. Listen, today, guys, I am going to be mostly out. Thank God, not because I'm sick, but because we're doing a important production for Story Trading, which I could tell you about in the future. I'm going to be taking up most of my day. Some exciting content we're producing for Story Trading. So, guys, we'll communicate in the chat rooms, and good luck at 2 p.m. Trade it like you'd like. You know, you got to be careful out there. Take care.